Wall Street places ground under shares. Crude Steadies London prospects for a organization begin on Wall Street helped European shares claw returned from a brand new low for the 12 months on Thursday as investors weighed the risk of hefty hobby rate rises tipping economies into recession. Tech-laden Nasdaq futures had been up 1%, while S&P 500 futures won 0.7%. Stronger U.S. futures helped shares in Europe reverse an earlier fall to a 2022 low at the lower back of dismal economic records in Germany and France. Crude oil additionally recouped in advance losses. However, copper remained at 16-month lows as fears of a slowdown cast a pall over the red metal. U.S. Treasury yields remained lower on Thursday after Federal Reserve Chair Jerome Powell, in testimony to the U.S. Senate Banking Committee on Wednesday, underlined the vital bank's commitment to reducing inflation in any respect charges and mentioned a recession become, certainly a opportunity. Powell said, "Cash markets are as it should be priced, which means we are going to double the Fed funds fee this year," stated Jeremy Schwartz, international leader funding officer at Wisdom Tree Investments. "Coming into this year, we thought you was probably capable of keep away from recession this year, but without a doubt the information has started out to are available lots greater bad," Schwartz mentioned. In addition sign of market warning, J.P. Morgan NYSE, JPM analysts stated extra buyers have been turning to coins, surpassing its previous height in March 2020, when markets went right into a tailspin due to COVID-19 lockdowns. The German economic system, Europe's largest, suffered a sharp loss of momentum on the quit of the second sector, in line with the contemporary Purchasing Managers Index, while corresponding figures for France additionally showed weaker activity. UniCredit Bank stated the data, which sent euro area bond yields plunging, changed into sounding an alarm bell, suggesting that boom momentum might be weakening sooner and greater fast than anticipated. Prices of copper and crude oil fell on possibilities of less call for gas and constructing materials as consumers restrict spending. Copper has usually been the lead indicator commodity for financial increase, mentioned Patrick Spencer, vice chairman of equities at Baird Investment Bank. The MSCI All-Country Percentage Index become down 0.14%, off its low for the day, including to its slide of extra than 20% for the year. A slowdown is coming and it is really about diploma, mentioned Michael Hewson, leader markets analyst at CMC Markets. Spencer said there has been so much harm to stock markets that they had largely discounted a recession already. If you take a look at the data, I assume at worst what you are looking at is, maybe, a mild recession. I consider the markets are in a bottoming method, and perhaps you've only got some other 5% downside, Spencer mentioned. China fintech stocks in Asia have been combined, with South Korea down 1.2% while China's blue chips rose 1.7%, and Japan's Nikkei became flat. Chinese tech stocks in Hong Kong staged a strong rebound, growing to 8%, after Chinese President Xi Jinping chaired a top-level assembly that permitted a plan for similarly development of huge price firms and the fintech sector. Concerns approximately the demand outlook have sapped commodity expenditures, with oil tumbling on Thursday to the lowest in extra than a month. Brent crude turned into down 0.3% at $111.46 a barrel and U.S. crude declined 0.36% to $105.81 a barrel, both properly off their lows of the day. Iron ore changed into already at 6-month lows, having misplaced extra than 20% in latest weeks, at the same time as copper struck a 16-month trough. The yield on benchmark 10-year Treasury notes turned into down barely, at 3.1337%. The 2-year yield, which rises with buyers' expectancies of higher Fed fund costs, eased to a few 0.0398%, compared with a U.S. near of 3.056%. In forex markets, the dollar rose 0.340% in opposition to a basket of primary currencies. The index turned into up greater than 8% this year, reflecting the wide risk-off sentiment and the greenback's Fed-driven yield benefit. Gold was barely decrease, with spot costs traded at $1,827 in line with ounce, down 0.5% at the day. GOL.